Hello, thank you for attending this Zoom webinar podcast. My name is SeeWing Yee from the Yee Real Estate Network. And once again, my special guest is Richard Advani from Supreme Lending, a investment loan agent who does financing for investors all over the 50 states. He also does investment financing. He also do financing for regular owner-occupied primary home buyers everywhere else as well. So he covered all the gamut. So thank you, Richard, for helping me to do this joint podcast. And without further ado, the topic will be your home is the center of your universe. With the advent, look, the way we live has changed drastically ever since that pandemic has came upon us back in March 2020. The future of living, the future of American way of life is that people need a place to live. So with that in mind, what I'm talking about is with the advent of remote investing, it'll be a permanent shift in American culture, in world culture, really. The remote investing, remote living allow people to work remotely. It does not matter where they live in a country. And furthermore, with the migration patterns, is a clear-cut evidence that people are migrating from the urban core into the suburbs all over the US. So American workers and families, they want a home with more space, with more social distancing, and a home with a white picket fence, 3-bedroom, 2-bath, anywhere from 1,300 square foot to 1,800 square foot. That's a cookie cutter starter home. And people may even want to have one extra bedroom for work, home and office working. And they may want to have a backyard for their dogs to run around and to hang out in the backyard. Hopefully the backyard is fairly large. So that's the paradigm shift in American living for the foreseeable future, forever, really. So what I'm saying is, so there are two perspectives, right? The two perspective is people want to buy a home in those areas, a single family home to live, okay? Pay the mortgage, whatever, live in their home forever and raise their family, have a nice neighborhood. Now, so the methodology we're talking about is whether you're buying a home to live, you own the home, or as an investor, you're buying what is the most attractive real estate asset class in history? And the answer is single family home residential investing. We're talking. So as an investor, and Richard, you and I have been around for a long time in a real estate investment world. There are many ways to invest in real estate, right? People can flip, people can do syndication, people can buy multi-units, people can buy mobile homes, people can buy through real estate investment trusts, and just so many ways to do it. But what I found over the past 20 years, especially the business model that we use, is we specialize in helping real estate investors, especially mom and pop real estate investors who buy single family homes, the cookie cutter, 3-bedroom, 2-bath, 1,300 square foot to 1,800 square foot for a good price. The price are anywhere from, $223,000, a new construction, hopefully, to as much as $350,000 new construction, as long as the rent will cover those your expenses. So with that in mind, Richard, what are your thoughts? You've been in the real estate investment space for a long time, and you have done investment loans for over many years. And I have to believe that when people come to you for financing, they buy a cash flow properties, mostly single family homes. So from your perspective, why do you feel, if you agree with me, that is, I mean, a single family home investment is the best of all asset class for risk investors? What are your thoughts?
Yeah, I mean, I firstly definitely agree. I think it's just basic fundamentals, right? The American dream, as you stated earlier, is to move into a 3 or 4 bedroom, 2 bath, 3 bath, single family home, raise a family, put their roots down. There's not many people whose dream is to go and move their family into one of a unit of a triplex or a duplex, right? So inherently, there's going to be way more demand for single family homes, and that in turn is going to push up the price, and appreciation typically is going to be higher on single family homes versus multi-units, again, because just to re-elaborate on it, the buyer pool when you're going to sell a multi-unit is going to be significantly smaller than the buyer pool that you would be selling to if you're selling a single family home. Now, I don't think SeeWing saying that means multi-units are bad, and I'm not either, right? Multi-units are great, and it's important to have a balanced portfolio. But the question at hand is what's going to appreciate more. And, generally you are going to see those single family homes appreciate more and more. However, of course, what we're all seeing is in a lot of markets across the country, the cash flow is getting harder and harder and harder. It's still there, and there's still great investments and a good hedge against inflation, because keep in mind, we're paying down our loan balances as well on the back end. But multi-units still do offer, the chance to make a good positive front end return on the deal. But once again, they aren't going to appreciate as much as a single family home. And, with the housing shortage there is currently, which I don't think is going to get resolved anytime soon, house prices are going to continue to go up and exponentially more in my mind than multi-units. Now, the last thing I'll say on that point is multi-units they still appreciate, right? They still do go up. And in the last 3 years, a lot of people, myself included, have seen significant appreciation on the multi-units. But a lot of that in my mind too is because of the lack of inventory on single family homes. So that's creating more demand for the multi-units than there otherwise would be as well, just because there's not enough single families out there. So, excuse me, I think once that problem kind of rectifies itself and there's more single family homes built, you'll see that gap between the single family and multi-family appreciation get back to more historic levels. Because right now the multi-units, from my experience, are moving up the last couple of years, but I don't think that's going to be a long-term trend as compared to single family homes.
Yes, I agree with you. So especially for beginning real estate investors, the mom and pop, the newbies out there, I mean, normally as I work with our investors, Richard, you likewise, the initial action plan for most beginning investors, they are buying several single family home investment property, cash flow properties in a good markets. And then once they build up the single family home portfolio, over time, their real estate portfolio will evolve into something different, or into multi-units, duplex, fourplex. And if people want to go to the higher level, down the road, they will do some commercial investing, 5 units or above, or they could do a 1031 tax deferred exchange into more doors, more units. So at the end of the day, the beginning foundation for most beginning investors is to buy the cookie cutter single family homes in a good market. Now, especially, again, with the pandemic and everything else, young families, high quality renters, unable to buy their own house, they prefer to rent single family homes. And so what we're seeing with our investors is that there's a lot of bidding wars for renters because there's a lack of homes to rent. In all the markets that we are promoting, I mean, it's so easy to get the renter in because of the lack of homes to rent. So you're getting high quality renters, low vacancy rate. The renters are high quality. They have a very, very good job. You know, they're not gonna trash a house, nothing like that. So it's a very reassuring for risk investors, knowing that your single family home residential investing portfolio is gonna do well for you in terms of cash flow and appreciation. And one more thing I want to add, Richard, that us investors, we always get bombarded with the top 10 real estate market, what areas the best to buy, where people are moving. So you really have to be careful. You have to do your research and run the numbers. Let me give you an example. Zillow or any or other kind of so-called credible sources that we see out there. I see it every day, every week. We see the top 10 this, the top 10 fastest growing real estate market, whatever. But some of the markets, just because it's growing, appreciating, quite significantly, it does not mean as a real estate investor you should buy a single family home in those areas as a cash flow property. Because let me give you an example. If you forget about California, you're not going to cash flow, right? I mean, the rent to value ratio is so low. I mean, we all know, you hear it, Richard, as well. I mean, the past few years since the pandemic, there was some, triple rapid acceleration appreciation in Boise, Idaho, in Las Vegas, in Phoenix, Arizona, in Utah, in the Western region. And also in Texas, Austin, we hear about Austin a lot. We hear about Florida and North Carolina. Many places have are among the top 10 real estate markets. You have to be careful, because the reason why we're not promoting the Western region of the U.S. Is that the median price of a single family home, for example, in Phoenix is, let's say, is $400,000, but you look at the rent is only like $2,000. So you're not going to buy a $400,000 single family home when a renter is going to pay you only $2,000 rent, because do the math, which Richard does all the time when you do financing for investors. The $2,000 rent are not going to cover your mortgage, taxes, insurance, and property management fee. The number is not going to work. You can have a large negative cash flow. So the Western region, we know, has been appreciating a lot. Is not an ideal investment strategy for most investors. So therefore, you have to go to a market that are very, very affordable still, that the single family home prices are around $250,000 to $350,000 range, and the projected rent is around $1,800 to $2,400. We're talking like, it's not 1% rule. We've been preaching 1% rule. I mean, 1% multiplied by the purchase price equals your monthly gross rent. You're not going to get that in this fast rising markets. What I promote is like 0.007 of your purchase price. So that's the formula. Okay, that's the rent to value ratio. If you can achieve, if you buy a $250,000 single family home somewhere in South and Southeast Florida, Texas, whatever, if you multiply it by 0.007, what's the rent? Off the top of my head, probably like $1,750. That's fine. So 0.007 multiplied by the purchase price with the gross monthly rent. If you put 20 to 25% down payment, okay, as a quick analysis, numerical analysis, you will achieve positive cash flow, $200, $300, $400 per month when you buy a typical new construction or new resale homes, cookie cutter, 3-bedroom, 2-bath investment home. And you can find those homes mainly in Texas and Florida, North Carolina, and a few other places in the South and Southeast. That is the area where the growth is happening: population growth, job growth, migration patterns, and affordability, no state income taxes, warm weather area, good business climate, all those, all this, metrics. That is my recap as we almost concluding this podcast. I know I'm talking quite a long time. So from your perspective, Richard, what are your thoughts in terms of we agree single family home is the center of the universe for the foreseeable future. That is a great portfolio acquisition for most investors. So, so what are your thoughts?
Kind of aligning with what we've already discussed. Single family homes, I agree, are kind of the center of the universe. However, at the moment, multi-units are a good addition to a portfolio, but personally, I prefer to have the bulk of my portfolio be single family homes. And then, like you said, house prices are continuing to go up. It is getting a little harder to find cash flow. However, and interest rates also have moved up pretty sharply so far this year. However, one thing we've got to keep in mind is that we've been spoiled the last year and a half. Prior to that, we were at all-time lows, and for the last year and a half, they dropped even lower. However, even with the increase that we've seen this year, we're still below the prior all-time lows. So, rates are still good, and that's a good hedge against obviously making up for that increase in home values. And, I know you, SeeWing, work with a lot of good markets that are still higher cash flow, that you can still go and make cash flow. We went through stages, I think it's been 6 or 7, 8 years ago, where, the Vegases, the Arizonas, the Texases, although Texas still has great opportunities. But a lot of those markets started as a whole fading out of the real estate investment community, or at least those people chasing, a certain level of return. And, and we've slowly seen the migration of investors start moving further east, as you move further east, even with the market where it is today, there are still tons of markets where you can make double-digit returns on, a product that, is 120, 140,000 and under. And, I know you work with a lot of those markets as well. So, for new investors, don't think there aren't opportunities out there. There are still opportunities where you can go make, a bunch of positive cash flow on the front end. And the reason I mentioned front end is, it's funny. I work with so many investors that are, roughly my age, mid to high 30s, or even moving into the 40s. And in my opinion, cash flow and ROI is very, very important when gauging a property to make sure that it's a good investment. But at the end of the day, most of us are still working for another 20 or 30 years in that demographic I just mentioned. And I mean, yeah, I can make 12% return, $300 cash flow into my pocket. But what is that going to do for me? $300 isn't going to do anything for me. Maybe pay for a dinner, and that's obviously, things are crazy expensive right now. What I'm looking more at is the long-term, obviously, return on the property, which, 15 to 20 years from now, when it's paid off, when it's been a hedge against inflation and rents have gone up, that's the time I want to collect the rent, $1,600, $1,800, $2,000 a month. So what I guess I'm basically saying is, don't be afraid to buy properties that have a little less cash flow than you would want on the front end, because once again, the front end, that $200 a month, $300 a month isn't going to change our lives right now. Now, look, if you're retired trying to replace an income and you're 55, little different strategy for you, right? But if you're younger, if you look at a $400,000 real estate investment, a lot of times in this market, you're going to be making $100 a month on the front end in cash flow, very small return, but your return on amortization, where you're paying down the balance, a lot of times is $500, $600 a month you're paying down. So, although your front end return may be very small, you're still making a return on amortization on the back end, right? You're still making $400 to $500, $300 plus a month, building wealth. Not to mention that, of course, the hedge against inflation. As we all know, cost of every single thing has gone up. They finally admitted in the last 2 days, the Feds, that the inflation rate since last December is 7%, which is mind blowing, and it's high to them. That's nonsense. I mean, if anyone out there is not living under a rock, everything's gone up 15 to 20%. Look at your Amazon, look at what you bought a year ago today, and look at what the same thing cost today, and everything's gone up. And you know what? If you had a 30-year fixed mortgage, what hasn't gone up is your payment. So, don't look at real estate just as the short term. What's my front end ROI? How much am I going to make every month? If you're younger, look at it long term. Look at the back end return. The fact that you're building 3 to 4% or making 3 to 4% on the back end through return on amortization, meaning once again that your balance is getting paid down every month. Plus, of course, the hedge against inflation. And most real estate investors, the last year and a half, as inflation has spiraled out of control, we've kind of seen the fruits of owning real estate even more because rents have gone up, everything else has become more expensive, and our payments are the same. And that $300 a month that we were making before now is $600 a month. And that return has gone from 8% to 16% with the increase in rent. And, some of those properties I'm only 3 to 5 years in. So what happens when you're 15 to 20 years in? Right? How much more wealth are you building then? So, get away from the 1 to 3 year look 5, 8, 10, 15 years out. And most all real estate's going to pencil out very, very well still. I think it's important to have an exit strategy, make sure that your property can absorb a little change in the market without going negative. But besides that, in the long run, I think real estate has proven itself to be, the best investment.
Wow, that's nothing more I need to say. I mean, you stole all the great words out of my mouth. I mean, it's a tremendous recap. I mean, as my members anybody gonna watch this video, you need to replay what Richard just providing this high level 1 minute recap, and it just bodes very well. So very well said. And the way you articulate it is it's just so resonate with me and it should be with a lot of people. So yep, I totally agree, Richard. And I really with that said, I mean, this is it. And this is the takeaway from this podcast. And one quick final word for me is it's never wrong time to buy real estate, and you just have to take action. All right. I mean, there's a lot of negativity out there. There's a lot of things going on. But focus on your personal economy. We cannot, a lot of things we cannot control. We cannot control inflation. We cannot control what the Fed is going to do. Control your personal economy. Control your own unique financial future. Focus on your goal. Focus on your long-term journey, financial journey, real estate journey. Think long-term, have a positive attitude, commit to your goals, take action, and overcome fear. And down the road, 10, 20, 30 years later, you're going to reap the fruits of your labor, and you're going to achieve financial freedom for yourself and your family, and legacy for your children, grandchildren, for long, long time to come. Thank you so much, Richard Advani from Supreme Lending, for assisting with me. Great, content. And my name is SeeWing Yee from the Yee Real Estate Network. Thank you so much for attending. I'll see you on the other side. Goodbye.